Okay, traders, today is February 28th, 2012. It is a Tuesday, and we are looking at the E-mini S&P daily bar chart. Now, obviously, this is a chart that we've all looked at together for quite some time in the OMNI Trading Academy, and you'll recognize that it all started with this inverted head and shoulders, something that we had pointed out. And I had said after the inverted head and shoulders, what you will find is this long run that takes place. And if you've been with me for a lot of classes, you'll see that I had gone back for several years and showed you that the same thing happens after each head and shoulders. You can't really see it right here because we are not in the most active part of the month, but on a continuous chart you'd recognize same sort of thing happened here. You had this small head and shoulders, and then you had a little bit of a run. It seems to be a characteristic of the E-mini S&P. You get an inverted head and shoulders and then a long extended run. So we've got the long extended run. You can see that we're in it. In the last couple of days, crude oil has tried everything in its power as it ran up to knock the ES down. And you know what? It is not working. I think that the ES can absorb crude up until about the price of 114 through 115. I think if we get there slowly, the ES can be fine with a price like that in crude. If we skyrocket there, we're in trouble. But once you breach this area in crude, this starts to run into trouble. We're not there yet, traders. That's what I said in my video yesterday. We're not there yet, but this is a magic number in crude oil. If you really want to watch out for what could knock us down, this would be the number that probably prompts the sellers to come out of the woodwork, and then we run into trouble. Again, we are not there at the moment, so don't sweat something that's not there. You know, in other words, do not cross a bridge till you get to it. The crude may never hit 114. None of this may ever matter. But the 114, 115 area in crude will be critical. We'll get to that a little bit later. What I like about the E-mini S&P is not only has it stayed inside this channel even when crude was threatening to move higher, but it's starting to create an upwards channel now, pointing us even higher. You know, a little bit more, but starting to point us even higher. Gotta love the E-mini S&P. Let's move on to the NASDAQ. Look at this NASDAQ chart, traders. Wow. I mean, who wouldn't want to just continually buy the dips here? Of course, when you look at crude and NASDAQ did something like this, because in reality, when you tighten this up a little bit, this is what it looked like yesterday. NASDAQ came through, but it did rally back above. So once that happens, you can then expand your channel to the new low, and that's your new channel. So all it really did was expand the channel for us, and away it goes. We should hit, you know, we have a projection, an early week projection this week, that in the NASDAQ, 2660 is expected. It's a note that I had on my OMNI since Monday. This is the note that I had on my analysis from Monday, that the NASDAQ is expected to hit 2660 this week. That's somewhere up here. You know, it's somewhere at the top. There you go. 2660 actually comes in at the top of this trend channel, which would make perfect sense. It's not where the OMNI got that number from, but there is a confirmation of the number right there. So I think 2660 comes our way. This is in the stars according to OMNI. So you have great looking charts right here. Let's go look at the Dow Jones Industrial Average. Look at the Dow Jones Industrial Average. Could it get any better? This being previous highs. Following the line across, and I'll just grab another line so it's easy to follow me. Following this line across, look, we are above the previous highs, but here's what's interesting. Rallied up, came back, tested those highs, tested the lower end of the support channel at the same time, held, and is now making new highs. That, my friends, needs a round of applause. You gotta love this. I mean, wow, we have a nice bull market here. Okay, we're going to look at the tranny now. Dow Jones Transportation Average. If you'll recall back here, we had something that we claimed would not become a double top because the NASDAQ and all the other indices would not allow it. That certainly did not become a double top. We blasted right through it on this day. Everyone thought we had a triple top. We blasted right through, and here we are. However, the tranny has been feeling the pain of the higher price crude since the day it started rallying. Look, the tranny has absolutely felt the pain of the high price of crude. That would absolutely happen to the rest of our markets if crude goes too much higher. You'd have to expect the tranny stocks get affected right away because, let's face it, tranny, transportation. If they are transportation stocks, those transportation stocks are absolutely going to feel the pain the moment energy starts to move. That's why you've had your leader, or the Dow Jones Transportation Average, in this little tailspin right now. Because, of course, it's going to immediately feel the high price of crude. That's what you have. So, you know, the leader has not been moving higher. It is absolutely showing us that if crude continues higher, we are going to feel pain. However, at this moment in time, you know, trading today on February 28th, the emini, S&P, and the NASDAQ, as you can clearly see, are not feeling the pain from crude. And as long as crude maintains its levels where it's at now or goes lower, we should look really fine in our U.S. indice markets. If you look at technical indicators that go along with these indices, traders, they are beautiful looking. I mean, straight up, you have your commodity channel index, or your CCI. You have an RSI pointing straight up. You have a WADX, and that looks perfect for a buy. I mean, just perfect for a buy right there. Just about any indicator that I can pull for you will look bullish. The market looks good. That you may think is bearish. That's an MACD, but let's look at that a little more closely. That's actually hooking towards the upside right here. That little blue line has hooked and is now heading up. That is bullish, not bearish. And MACD is a very slow lagging indicator. If it has the slightest hook up, it means a lot. So your indicators are bullish. Your indices are bullish. Let's continue. Let's go look at Germany. Look at the DAX. The DAX, once again, this was previous highs, this red line up here. I think we are going to at least try for that red line this year. And we are maintaining levels inside of this parallel channel. As you see, it stepped out on Monday, came right back, settled above it on Tuesday, held the red line or the channel, and is starting to move higher. This is also a form of, even though it moved very quickly, this is a form of a flag right here. Look, I'll define it for you and you will see it happen. This is a form of a flag right there. It's a little bull flag. You are breaking out of it now. Go DAX. So you have that looking good. Then, of course, we can go look at our U.S. bonds, and even though they've been rallying, traders, they're rallying to a good old familiar spot. This red circle indicates what happens every time we hit this blue line up here. It seems that this market slowly is starting to work its way lower. Why? Because this line is slowly working its way lower, and every time we hit it, we seem to come back down. At some point, you break that and continue on. So bonds look like they're running into resistance up here, which would make sense if, in fact, the indices are going to move higher. Another reason to think, stay focused on indices moving higher as long as crude doesn't blast off too fast. Euro currency. Look at how smartly this euro currency is rebounding. You have what's called a V bottom down here. 1, 2, easily defined, looks pretty V-ish to me. So you have your V bottom. The next thing that should happen usually is this. You get some gathering over here. You get some gathering over here, or consolidation, if you will. That usually equates to an inverted head and shoulders, and then the up move really kicks in. If you do not think that's what's going on here, just look at the emini S&P inside that rectangle. You had your inverted head and shoulders, and then the big move took place. Look at the euro. You have your inverted head and shoulders forming. The next thing that happens is the big move should take place. I would think the euro wants to race up to the 200 ball moving average at 137, and then we'll see what happens once it gets there. Then you have the dollar index. This dollar index can be interesting. Look at how it fell out of this channel. Once it broke right here, broken channel, the market does not look good here. This market looks like it wants to fall apart, and another reason would be the upright head and shoulders that is forming right here. Shoulder left. The head sticks right out at you. Shoulder right. We're basically falling out of it already. So that looks like it wants to head down to at least this 200 bar moving average. Dollar bearish, stocks bullish. Dollar bearish, euro bullish. The scenario makes a lot of sense. Now I want you to look at the copper market. Copper market is back above the 200 bar moving average. When it fails at the 200, it is ugly. When it gets above the 200, it's an extended ride. And that's what's going on right now. You got above the 200, had an extended ride. Got below the 200, hit it, and broke. We are now back above the 200. It's had a lot of fighting here, but it is above the 200, and it looks good for now. You have to basically look at this high, connect it to this high, and say once we get above that, I think we have a breakout, which is starting to happen now. Now remember that copper tends to be a barometer of economic activity in the United States and the world. So if the copper is sticking its head up and the copper is above the 200 bar moving average and the copper is about to break above this line, it makes perfect sense that we expect our U.S. indices to follow in suit. Traders, last look at your NASDAQ. That is a beautiful, beautiful looking chart. You are expecting the 126.60 to 70 level this week, and I think you get to see that this week. Traders, thank you so much for coming to today's class. I hope these classes are helping to keep you in tune with market movement and how to stay in touch with the markets going forward. Thank you so much for class, traders. I'll be here to answer questions for you. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.